Okay, so this is the second episode of Gen Z Investing Insights. We're going to start off talking about earnings last week, which had Alphabet, Microsoft, Meta, and Amazon. Google beat EPS and revenue earnings expectations along with Microsoft, Meta, and Amazon. My question to you guys is, considering the recent tech layoffs and the eventual cool off of inflation, are the recent earnings an indication of tech as a whole getting stronger, or does tech still have a long way to go before it starts to strengthen and get back to pre-pandemic normalcy?
I think it's a difference between big tech and if you're talking about the whole tech market. I think a lot of the no revenue companies still have a while to go. I don't think they're ever going to really, most of them won't ever get back to the highs that they were during the pandemic. But I think a lot of the big tech companies are showing that they're thriving after the pandemics. I think they're still going to be strong, and they're showing that through this round of earnings. We saw a lot of beats, a huge beat by Facebook, all the huge beat by Microsoft. These huge beats coming from big tech, but at the same time, on the small tech, we haven't really seen that same kind of movement as we have on the big tech. So I think it's more of a big tech versus small tech type of thing.
Yeah, I totally agree with Pierce. I think for the small tech, a really good one to look at is Snap. It's not. It seems might seem big to all of us, but the EPS was expected to be like negative. It came in at a little above, but it still got slaughtered in the stock market. So yeah, I really do think that it's a big tech move and not tech in general.
I think you guys are right, and we will get more information about this week with Apple and Uber releasing their earnings. But another question going more into AI is with ChatGPT, it has created a plethora of new startups based on generative AI. Um, do you guys think startups that utilize ChatGPT like features are needed and are beneficial to society? And or do these startups that utilize generative AI produce profitable long-term businesses?
I think we've all seen like the ads on TikTok. I don't know if you've gotten those ads about the new AI, like all those new little AI companies that are kind of going off of ChatGPT, kind of trying to get a lot, mostly in the techno or education sector, I would say, where they're trying to get around the Turnitin, which kind of will enable students to use AI in their assignments and would be pretty disruptive to the education world. So there's a lot of those type of startups, but personally, I don't really see that much they're that effective and they're that important to society, as I really don't think they're introducing much new technology. And I think they're utilizing the technologies that's there, but I feel like if OpenAI really wanted to do that, they could do that themselves. I don't think like their technology is especially important. But at the same time, like I'm kind of neutral because I'm not like against the technology either. I think it's all interesting.
I'd say, yeah, I'm kind of neutral, maybe a little negative when it comes to it's just schoolwork. I think that school is a place where you're supposed to, learn. School doesn't really define you as a person. It doesn't really define intellect. It's what helps you build your character and your ability to work. And I think that these startups that are kind of trying to cheats the schooling system don't really benefit anyone in the long run. I think that it's actually going to make society a lot more ineffective. However, I think that like OpenAI and like a workplace is much better. Like getting quick answers to questions, being able to analyze data, that's useful. But I feel like trying to turn it in is kind of useless and it's just going to hurt us.
I think the baseline for its effect on society is that what we see with ChatGPT is that the future of automation is going to come either way. So we can either accept this and adopt it into education and like HR jobs, um, and get rid of those jobs, get rid of the barriers to AI and just kind of accept it. Um, for example, if and for a business sense, we were talking about the education thing, and I think as a long-term business, I think that they are pretty easy to make a lot of money off of. If you do that homework, like uh make me do homework, and then you offer that turnitin.com thing as a subscription feature, you're not only getting like a bunch of users through the free service where you're offering a multitude of different features that can help students with whatever they need. But then you're also bringing in that subscription feature that lets them do whatever they want because their teachers can't detect it that it's AI. Alex, do you want to do your options segment now?
Oh yeah, sure. So I'll share my screen. I feel like it'll be easier to follow along that way. So last week, I'll just show my portfolio. Last week I ran options on SPY. I did a straddle. So I essentially bet on volatility due to all the big tech earnings coming in. I thought that they would all come in either bullish or bearish. I didn't really think that there'd be a stagnant market. So I traded that. I made like a 30-ish% profit. And so the way that I generally do the straddles is I buy one strike price out of the money and then I sell two from there. And you have to do on both like the calls and puts side. And so this basically allows you to make money as long as the market moves. It's a bit funky right now. Normally they're the same, but essentially if the market moves 0.92% positive or negative 0.77%, you make money, you break even. So I think if the market isn't pricing something in that you think will happen, this is a good strategy. You can also do it inversely if you sell instead of buying. So I think that's something that you can do in the market and you can play around with to increase your profitability.
I think that's you're gonna do that this week. You're gonna try that this week.
Yeah, I'll probably do it this week. I'm interested to hear what you guys think about the market before I make my play. Yeah.
Do you want to get into that? What our market predictions are for this week?
We could.
We could.
What
So
is that?
we have the Apple and Uber earnings, which I talked about earlier, but then we also have the Berkshire Hathaway annual shareholder meeting, which will definitely impact the market. So what are your guys' market predictions for this week?
Personally, I really don't see that much bearish action. I'm still very neutral now. I was a little bearish last week going into big tech earnings, but we saw that Meta beat. I think that was huge, and we saw that Microsoft beat. So I think the other two tech companies reporting this week, I know Apple is usually either a beat or they at least it's very rare that Apple misses in the past years, and Uber it could go both ways. I could see it like a snap type of move, or I could see it, kind of like a meta type of move. So I think either way, I think Uber's definitely a lot more volatile after earnings, in my opinion, than Snapchat. But I think, or sorry, not Snapchat, than Apple. But I think there's going to be a pretty significant move for Uber in total. But I don't think the market's really going to move more than it already did last week. Is what I'm trying to say.
Yeah, I'd say I agree with Pierce. I was also a tad bit bearish last week, but after seeing the earnings, I think that the market is probably going to be green this week. I think the only thing that you need to watch out for would be the FDIC placing FRC into receivership. I feel like that would kind of kill our gains from last week. So, and I do think that it's likely to happen, or at least some sort of deal. I don't know. I feel it could be volatile again this week, but it's hard to say for sure.
I want to go into what we are talking about with Uber. I do have a question, which is Tesla is, I don't think it's official yet, but I think they're trying to adopt a taxi system with their automation service since they're going to have that full automation. Do you think that that is going to be a very strong competitor to Uber? And will they be able to beat Tesla if Tesla does really well with their taxi service?
I mean, what we learned about in, of course, our A push class is the vertical integration and horizontal integration. I think this is a really good example of vertical integration where a company is taking kind of the entire process, whereas Uber only controls the riders, Tesla controls the cars, and then it also controls, they have their charging stations, and then it also on top of that will control their kind of website, I guess, that basically the technology that Uber does now. So I think it could be a pretty viable competitor to Uber, but that's so far down the road. I mean, so far. There's so many hiccups and stuff that Tesla has to overcome to even get, approved for this, because I'm assuming it's self-driving. That's what I'm assuming. And I mean, self-driving, we've seen a few incidents that Teslas have had. So imagine trying to get that approved for a whole service around the world. It's pretty difficult to. So Uber already has all that, uh, like all that infrastructure in place already, and Tesla has so far to go in terms of getting that automation, like the self-driving approved and all that. So I think it's a while down the road. So I wouldn't really worry about it if you're an Uber investor right now.
Do you think Uber could, and this is a half-baked idea. Do you think Uber could pay people extra who own full automated vehicles to host that? Because they already have those regulations and patents down. So if they just got those automation vehicles from personal like independent people, they could have that Tesla, they could have the Tesla automation and that regulatory already and beat Tesla to the battle. Do you think they could do that?
Like Uber hosting Teslas on their network, or
Something like Teslas or just like any vehicle that has full automation.
yeah, I think they could do that. I think in order for Uber to do that, the thing with the difference between Tesla and Uber is Tesla's a car company, so they get their cars for a lot cheaper than Uber can make them, especially if they're using them for mass production. So it's just so easy to kind of make a generic car. I don't think Uber has the same power to do that. And I think it's gonna be a lot more expensive for Uber to do that as well. So I don't think Uber's probably looking at that solution. I know Uber right now, what they're doing is I think they're focusing more on kind of the DoorDash type of route in terms of rather than trying to get to further their business on their main business, like driving transportation. They're now using kind of these robots I saw in LA at least, that deliver food around. So that's kind of their automation that they're looking at right now. It's more delivery robots, and those I think have a much higher chance of like being, around for the next like 5 to 10 years. Then I think we see self-driving Uber cars and stuff like that, just because it's so the technology is still really new for self-driving, and it's such a big move over to self-driving. I think it's just going to take a while for that to kind of get adopted by society.
Alex, do you have anything to add?
No, I agree. I agree with Pierce. I also don't think Tesla would sell their fully, like, I feel like they would have a separate fully automatic taxi service from their actual cars, at least for the start. So I don't think Uber will be able to, I don't think there'll be any like personal investments in these automated Teslas.
Um, Also going back to what we were talking about earlier, with FRC and the FDIC, do you think FRC is the last bank that is going to go down, or do you think there are more banks to come?
That's a really good
Um, you go first, Pierce. You go first.
sure.
Yeah, you can go.
So I've been looking at FRC for a while, and I think ever since like we saw all the other banks, and none of the moves before were as significant as FRC in terms of how long it took for after the announcement of SVB, where it dropped like 70 something percent, and then we never saw a recovery. So I feel like this was kind of in the works coming up, compared to some other banks. I don't think we've seen similar movement in terms of banks that are affected the same. I mean, we've seen these earnings from Western Alliance, and we also saw earnings from PacWest last week, and they both pretty substantially went up from their earnings. So it was pretty good reaction. FRC, of course, did not do the same thing, went down 40%. So I think depositors of those other regional banks aren't as worried as maybe FRC, because FRC hosted a lot of bigger clients as well. So that was the big problem, was they had so many clients of over the FDIC limit. So they had a lot of withdrawals compared to these other banks. So I don't think other regional banks are really at risk because they're not in that much of a similar situation compared to FRC's situation.
Yeah, I agree with Pierce. Also, for there to be like the FRC kind of situation in SVB, there needs to be fear. And I don't think that there is fear with other smaller regional banks. I think that the banking crisis as a whole, I don't think the banking's in a good spot right now, as I said in the previous episodes, because their deposits are they're losing money essentially through their deposits, and then their investments aren't at the same rates. So it's not really ideal for banking industry, but I don't think there'll be another FRC. I just don't see enough fear in other banks.
Yeah, I think you guys will make great points. Going into the next topic, the Fed rate decision comes out May 3rd, which is I think Wednesday, maybe Thursday. The consensus is that they're going to have another rate hike Do you guys disagree or agree with a Fed rate hike?
I know you probably watch this a little bit more closely than I do, so I'm wondering if you have any opinions, Jacob, on this topic before I kind of share my piece.
I think because FRC just went down, it's signaling. I think what you guys are right is that there's not a lot of fear, and I think the banking crisis is over. I don't think that speaks the same for inflation. I think inflation is still going to be prominent over through the summer. And if we do see a recession, that inflation is just going to be an indicator of that recession looming. Therefore, I do think to avoid increased inflation and a potential recession, it would be smart to increase the rate a little more.
Yeah, I think that was beautifully said. I also, before I was thinking it was be neutral. I wasn't that sure, but I do think that Powell is not looking at um, FRC for his rates. He's looking at like inflation, jobs. I think he'll raise by 25 basis points.
Yeah, I mean, I agree. I was kind of ignorant, so I apologize last week for I didn't really know that much about the topic, but I do agree. I think that we're going to see a raise. It's kind of projected, I guess, and I don't suspect anything else just because of. I mean, the market's pretty strong right now. It's not doing actually that poorly as we saw by big tech earnings, so it's not like we're in that situation that we were maybe 3 months ago. So I mean, I think we do see another raise.
Yeah. Do you guys have anything you want to talk about?
Oh, I want to talk about one situation we haven't addressed yet, which is the Bud Light controversy. What do you guys think of the Anheuser-Busch? Like, are you like, do you think this is a vesting opportunity or do you think it's a sell, I guess?
I have
Wait, it
not
was
heard
just
about this.
yeah, the Bud Light, as in like, didn't they have a transgender, like I forget, was it like a person, like an actor or something like that? Like on a commercial with their beer.
Yeah, they put so most of their consumer base is pretty heavily like I would say like old, like they were trying to they were trying to reach into a new consumer base. I'll just say that. And basically what they did is they put this transgender model on like their beer, and as a result, there was a lot of protest. And apparently it led to what I've been reading is billions and billions of dollars of losses uh to the Bud Light. And I mean, I've seen videos of all these beers having completely like sold out shelves, and then in a separate corner is kind of all the Bud Light cases with, all the Anheuser-Busch stuff. And the interesting thing was the Anheuser-Busch stock right now, if you look at the past action, it's only gone down 1% basically since the controversy started. So, I mean, my personal, I guess my personal opinion on it is I think that's it's going to be super overvalued because I think the consumer base now is kind of they're going away from it. There's people that have sold apparently there was like three kegs of Bud Light in one place. Now it's going down to like two beers of Bud Light. So I mean, it's just interesting. I think it's not priced in. I think it's going to impact earnings for multiple quarters. And a lot of times these situations, what happens, I'll be done a little pretty soon, but a lot of times what happens in these situations is, you recover, it lasts maybe a month or something, and then everything goes back to normal. But for some reason, I don't think this is one of those cases, and I don't think it's priced in yet. What
So
do you think?
if if I'm getting it right, it's a brand issue, and a part of their audience was upset from representation in a commercial. And they got a lot of blowback from that, seemingly a lot. I don't think that brand is the main driver of revenue for Bud Light. Um, I don't, this sounds kind of like an overreaction, and I really don't think that it's going to affect them that much.
I mean, to be honest, I don't know. I don't think I should. I don't know anything about beer. I mean, like I know people who drink beer. I don't know that many, and I don't really know. Like I feel like for us to comment on this without proper knowledge would be kind of ignorant, also dangerous. So I have no comment on this. I have no idea how it'll play out since I'm not a big beer drinker.
Yeah. Well, me neither. I was just like, it was an interesting trend. It was kind of all over the news for the past few weeks. And
Yeah, I saw a little bit.
they're releasing earnings on May 4th. So that was like the big thing is like what's going to happen there. But just a little interesting thing that was happening in the world.
Yeah,
I
I
have
don't
no
think.
idea.
I mean, I don't know that much about it, but I think it's just people being mad about something, and then saying, "I'm not gonna buy from you," and
Yeah.
then they're gonna start buying from them again in a month.
Yeah, I mean, yeah, we'll see. It'll be interesting. That's because that also gave a lot of, when stuff like that happens, their competitors benefit pretty significantly. So it'll be interesting to see how that kind of all works out in the market. But we'll see in a few months. I'm pretty sure all of us are staying out of that, but it's an interesting trend in the market.
Another thing that I noticed was Chipotle stock. Did you guys see Chipotle stock?
Oh yeah,
They are getting pretty big. I think their market cap is at 8 billion. I want to say 8 billion.
55 billion.
Really?
Yeah, 55 billion market cap.
McDonald's is at I think 225. Do you think if Chipotle is able to increase their brand presence and continue to offer good services to their customers and grow their customer base, could they be a viable competition for McDonald's long term?
Nah, I'm a Chipotle hater, to be honest. I don't like Chipotle that much. I think the food's kind of mid, but so is McDonald's. I think business wise, I feel like they also have slightly different audiences. Like they're both kind of fast food, but I feel like Chipotle is where you go if you're trying to be like healthy fast food. So I don't know. I feel like yeah, I feel like if they open up more locations, I feel like people will go. I know a lot of people like Chipotle. So yeah, I think that if they continue doing what they're doing, they will be a pretty viable competitor to McDonald's.
I think you hit the nail on the hammer there. I think I'm a big Chipotle consumer, so I'm going to disagree with you on the fact that Chipotle is bad. I mean, I went there for lunch today, so but I love Chipotle, but I think they're so different in demographics. They're like not gonna compete. I mean, Chipotle for an average meal at Chipotle, you're probably paying like $10, at least $10. It's probably 10 to 15, just even $17 a meal. And McDonald's, you can get a meal there for under $10. Like it's hard to get above $10 at McDonald's if you're an average consumer. So I think they're just so different in their bases and they're not really competing, I would say. And because uh Chipotle's, it's just going for such a different demographic. So
I think you guys are right. I think that they're both fast food companies at the end of the day, and therefore they're going to be competing for similar customers. I think if you're talking about their audience who is lower class, they're automatically going to go to McDonald's because it's cheaper. But if we're talking upper lower class or middle class, they have those two options where it's like there is the health piece, but at the end of the day, it's like, do I want to eat Chipotle or do I want to eat McDonald's? I'm more comfortable with McDonald's because they have a bigger brand and I've ate with them since I was a kid. And if Chipotle is able to grow their brand a little more and gain more market share, I don't know if that's used correctly. Um, I think they could be doing better.
I think Chipotle. So I was reading a little bit I was doing a little research on Chipotle a few months ago, and I was reading about how they try to start these other brands and how like their Chipotle brand has really been like the most successful because the other brands they start, I think they try to start like a pizza, expand it to greater consumers. But I think Chipotle as a whole is so successful, especially now. I think the reason that Chipotle like it's more successful than any other of their brands is because the target audience is kind of the what's expanding right now is like the average like I guess gym goer and like it's very associated with like fitness and I mean I go there a lot and I think like most of the people that I know that go to the gym like maybe like 5 to 7 like basically every day go to Chipotle. So it's like very associated with that movement. I think that movement is growing so significantly and along with it is Chipotle. And the thing about Chipotle as well is regardless of how much they raise prices, they've been able to keep their consumers. So I think it's really impressive for a company. And the reason why it's worth so much is because no matter how much they raise it, they're keeping their consumers, which is a lot of companies cannot do that same thing. Like I don't think truthfully, if McDonald's raised their prices like let's say like 10%, they would probably lose like a significant amount of their customer base. So like maybe like Burger King or other fast food chains. But if Chipotle did the same thing and raised their prices by 10%, then I think they would probably maintain most of their consumers.
Yeah, I really like that point. I feel like McDonald's is just a fast food place, but Chipotle is it's different in a sense. I think for Chipotle, they need to increase their presence. Like when you're on a road trip, there's McDonald's signs everywhere. McDonald's is literally everywhere around the world, and it's not the same with Chipotle. But I feel like if Chipotle built up the Chipotle brand instead of trying to diversify, they'd be doing better.
That's right. Do you guys have anything else you want to talk about?
You guys want to talk about JP Morgan real quick and like the how like if I don't know if we've covered this, but like JP Morgan went up like 7% or something, and about how like FRC. I guess what I'm trying to say is like FRC going bankrupt, or it's not bankrupt, but getting taken over is like a really good example of like we've talked about a lot on this podcast, but like smaller banks, that money is moving into like the really big banks. So I guess my question to y'all is like, what bank do you think is going to benefit the most from this? Like what big bank? If you were going to buy one.
I'd probably go JP Morgan, to be honest. I feel like it's JP Morgan, you know. I feel like Chase is just it's also kind of like McDonald's, it's everywhere. I feel like I see far more Chase banks than I see like Wells Fargo. I feel like the brand is just more it's just a stronger brand in general. So I think Chase will have the biggest run up on it.
I think JP Morgan too. I think Jamie in a sense is trying to position himself as becoming trying to position JP Morgan as the biggest bank and not like um a dictator of all banks, but just the biggest one.
I think that's a good take. I was thinking either that or actually I'm not hating Wells Fargo right now. I think they had a lot of controversy in the past. Personally, I think I agree with y'all. I think JP Morgan is like the best bank overall in terms of like not as many issues as maybe a company like Wells Fargo or all these other companies. But I think Wells Fargo still has a lot of potential. I think a lot of the controversy right now is pretty like far behind them. And I think I'm not sure if they paid the largest dividend out of the group. But I feel like Wells Fargo still has a lot of room to run considering how much we saw JP Morgan run after all the smaller banks kind of were getting taken over.
Did Wells Fargo give money to FRC? Were they part of the banks?
I don't think so.
Yeah, I can
I think
check.
if FRC goes under, I feel like that might be might be kind of bullish for Wells Fargo. More deposits coming in, and they didn't really lose anything. They don't have anything on like they don't have any risk.
I hear
But
JP Morgan may take over First Republic as well. You hear that?
yeah, I think that they want to wait for receivership. To be honest, they kind of want to they don't want to take on that debt FRC has.
Well, I think yeah. Right now, the FRC is definitely. I'm not sure if they officially announced if it's going in receivership. I don't know if you guys read that. I think it's definitely.
It's like speculated. It's like expected they go into receivership, but I don't believe it's happened yet.
I think yeah. I think for sure they're going to go into receivership just because of the amount of debt that they have and how significant that could be to the FDIC if they don't take care of it now. So and we'll see. This will be an interesting week once again for small banks. I know we've been watching small banks for a while, but First Republic, if they go down, we'll see if Western Alliance follows or some of these other small banks. I'm assuming they won't because they already released earnings and most of them did beat, but it'll be interesting to watch.
We should call
Yeah,
this the FRC podcast. We talk about FRC so much.
that's like the biggest thing to talk about right now.
Yeah.
Also, Wells Fargo did give money. They gave 5 billion, just like Chase. So maybe cancel the calls in Wells Fargo.
So I'm not really sure. I don't want to speak on this because I don't really know what happens if you give like if a company goes into receivership and you have a pretty significant amount of like money loaned to them. I'm not 100% sure if it gets wiped out. Like
It's like it like kind of depends. So basically, the FDIC will insure everyone who is in their insurance limit. So $250,000. Everyone gets 250,000. Then they have to get rid of all the debt that FRC has, or FRB, because it's no longer the stock, it's the company. So they'll start selling, or they'll pay off the debt with all the money that they have in deposits and assets. And then any leftover money is paid out proportionately to the depositors. So if like, say they have 20% left, right? Then JP Morgan Chase gets 20% of their 5 billion back. That's how it would work.
That makes sense. Yeah.
Yeah. And with that, I think that wraps up the third episode. The third episode of Gen Z Investing Insights. Thank you for listening if you made it this far.
Thank you all.